Hello, good day. Today is the 6th of April 2009. I'm in Singapore and the weather is very bad indeed, and it's raining cats and dogs, and you can see the flashes of lightning. There you are. The thunder is also coming on heavy. But I think the events of last week stole the thunder from the dollar, which basically meant that the ECB cut rates by only 0.25%, and the G20, showed a lot of muscle, which allayed a lot of fears about further downturn in the global economy, and which of course saw a scaling back of dollar-related safe haven plays. So we saw the movement into many other currencies other than the dollar in the week, especially the pound has gained from that. The euro has also crept up higher, and of course the yen weakened because the yen too was strengthening on the basis of being a safe haven, viewed as a safe haven currency. So in all, we saw the dollar weaken, and that was basically the theme that we were banking on for the last few weeks. This week too, we expect a lot of data from the major world economies, and they are of course going to point to a lot of pain, a slowdown, so on and so forth. But by and large, things are on the mend. I think risk is going to be paramount on the plate of the traders, and I think that would help the GBP especially, and the euro, and of course the Swiss franc, which despite the fact that the SNB had promised to intervene if it were to become stronger, but who can go against the global tide? In India, of course, we saw the rupee finally strengthen, and today as we speak, it is close to 49, 80, 85, and I think if this support between 85 and 90 is taken out, 49.50 and then maybe lower. So very much a very, very well connected global economic order. Thank you. We're showing you the chart of the GBP and how it has taken support from the neckline, as we mentioned last week, and moved out higher. So a clear projection of this wave, which we see here, which we would like to consider as wave 1 from this sequence, and this is wave 2, and then it should come to somewhere 152, the minimum move. Up ahead right now, we see resistance at just under 150, which once taken out, we see it moving much higher. So overall, like we have been trying to suggest, that the pound is definitely headed much higher from here, and this being the third part of the overall wave structure, it is expected to be quite strong. Next, we take a look at the Canadian dollar, which resembles a diagonal 5 here over the last few months, and we see that right now there is support at 122, which once taken out, a clear dive towards the 115, 110 region becomes quite likely. We also take here a look at the yen, which has lost against the dollar, and we would consider this as wave 2 and this as wave 4. We had some problem with this wave 4 coming below wave 1, but we argued that it had to be on a closing basis, which did not happen. So it can still qualify, we feel, as wave 4, and then wave 5 should give us a minimum target somewhere close to 102, 103, and a possible target close to 107. Thank you and have a great week ahead.